Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. Today I'm going to be going over the dragon pattern that is currently displaying on the XRP chart. Now I have been talking about this 5-wave Elliott Wave impulse move to the upside for the last couple of weeks, and I'm going to go into more detail on this particular matter. In regards to trading, no pattern is perfect and all patterns have a failure rate. But confluence is what makes the difference. And although we are seeing a dragon pattern on the XRP chart, the confluence, which is a factor that's laying just behind the dragon pattern, is what's called a 5-wave impulse, where wave 4 is a contracting or descending triangle. And that is exactly what we are seeing now. So let's not waste any more time and let's get into the chart. For additional information and exclusive perks, do consider joining me and the rest of our community on Patreon. So this is the current XRP 4-hour chart, and as you can clearly see, we have a head up here, coming down here for the front feet. We have the hump right here, coming down to the rear feet, and the tail. This is what's known as a dragon pattern. But there is also an underlying pattern here in regard to Elliott Wave that makes this even more powerful and adds a second layer of confluence to the pattern that we are seeing. First, we take this, draw a nice trend line. And depending on who you are and how you trade, these trend lines are going to vary depending on how we see things. And I'm also just doing a demonstration here, so I'm not going to make everything absolutely perfect like I have on my other chart. I'm simply just conveying the information right here, so I'm likely going to be off just a little bit. But we now have this upper and this lower trend line, which is showing a slightly descending wedge on the chart. Now we can clearly see an ABC correction right here on the chart, and you'll understand why I'm extending this here in just a minute. Since this is the main pattern, I'm going to highlight this in white. Now this ABC is actually part of a much bigger pattern that I'll demonstrate, but looking at this here, you can see that we've got a wave 1 right here, wave 2 here, coming up into the wave 3, ending right here, which leads us up to the all-time high moving into this pattern. So we know that it's a 5-wave impulse moving into this pattern. So now we'll dial back in on the pattern a little bit closer. Now to start off, we have a 5-wave move to the downside that you can see right here. I'm going to color this in red. We then have a 3-wave move up in the form of an ABC correction. So 5 waves down, 3 waves up. We then step back into another 5-wave move to the downside. We have a 3-way move right here in the form of a flat. And where we're currently trading, another 5-wave move to the downside. Right here. And we're currently working on another ABC right here. Now when looking at this area here, where the head is on the dragon pattern, you can see that this was an expanding, broadening wedge coming down into this 5-wave move. But you can clearly see the head, the hump, the front feet moving into the tail, but this tail still has some work to do. Now I've been looking at and studying this pattern for quite some time, trying to figure out exactly what's going on here, as things tend to change as the price action develops. And as you move forward, it gets easier and easier to start seeing where you're at within the pattern, especially when you start to get towards the end of this particular pattern. As you can see right here, we've actually formed an inverted head and shoulders pattern right here, which I talked about in my video this morning, where price actually got kind of rejected right here, as it looks like there's a smaller subwave of an ABC forming right here. So people are watching this pattern right here, and I think a lot of people are going to get faked out on this move because they don't realize what they're looking at. But what this actually has turned out to be is an A, a B, moving down to a C. We're currently working on the D. Now we're going to come down for an E, essentially forming what you could call a descending triangle. Now these 5-wave patterns occur with an Elliott wave on the 4th wave. Now that we know we are currently trading in the D leg right here in this ABC, we know that there's going to be a move to the downside here, finishing off the leg E, coming down towards the bottom of this pattern, which will likely sweep this previous low right here, because this C leg swept the A leg, and now the E is likely to sweep the C just because of the fact that it's a descending triangle pattern. At that point, then we will be moving into the 5-wave impulse that I've been talking about, because this is part of a much bigger pattern overall, the one that I've been discussing for quite some time now. What we are looking at here is a 1, 2, 3. This wave E right here coming down will be the termination point of the wave 4. Then we will be moving into the wave 5. Now if we take our Fibonacci levels here, they would be measured off of this wave 3 to try and determine where this high is going to be, because generally it goes to 1.618. But I've been talking about in my previous video that there could be a chance that this could end up being a truncated 5th, meaning it would end slightly below the wave 3 here, or perhaps just getting enough above it to where it sweeps it before breaking down. It will depend on how much momentum we have, how much volume is coming into this 5th wave move right here. But it very well could come up here to the 1.618. But I will be watching this very carefully in this area just in case it's truncated, trying to fake everybody out to the upside. So looking at this pattern overall, you can see how perfectly this fits. Now if we're going to calculate where that 1.618 could be, we would basically just measure this 3rd wave going up here, pulling back to the low of the pattern in this area, and that will give us an idea of where that 618 could ride to. In this particular case, measuring it in this particular way, we could expect to see a move up somewhere in that $4 range right here. It could push up past the 618, but it doesn't necessarily have to. And you could also just use your standard fib retracement levels coming off of this perceived low down here, wherever it is on the pattern, up to this particular high right here, which will give you a slightly different number. Technically, when you're going by the Elliott wave principle, this is the way you'd want to measure it, off of the wave 3 coming down to the lows here, and then setting it off of this low. It tends to be more accurate. But if we do overshoot past the 618, a lot of times I've noticed that if it does move up to the 702, heading towards the 786, a lot of times This fib level retracement will tip you off because it will come up and hit that 1.618 or very close to it. So you'd end up seeing something like this. But overall, when looking at this pattern, you can clearly see that we have a 5-wave Elliott Wave impulse move to the upside. We are now trading within the wave 4. This is an ABC correction. Those are your main waves. When coming into this now, we can see that what we actually have is an A, B, C, D, and an E. This wave right here was faking even me out for a minute because it looked like this was going to be the C, but to where it bounced and then this leg here came below this, I realized that this was all just one wave, making it the C wave. We are now currently forming the D wave of this ABCDE, and we are now in the ABC move up, forming the C leg. So essentially what we have left in this pattern is the formation of the E leg moving to the downside, coming down to the bottom of this point here. At that point, what we would have is the beginning of this wave 5. We would have the wave 4 termination, and we'll be moving into a move like this if this pattern plays true, which I absolutely believe it is going to. But this is what's throwing people off because we have this inverted head and shoulders pattern right here. And as you can see, when price moved up to it last night, I actually traded this. Price came up here, rejected off of that trend line as it generally does, moving back to the downside. And another thing that you'll notice on this particular pattern, and nowadays what I'm seeing, is it's more accurate if you want to mark these out by going to the line graph rather than using the candles to mark this upper trend line. So by marking it here, you can see how much more accurate it ended up being with the termination of this candle ending right here. But you can clearly see where we are in this ABC correction right here, finishing off the leg C before coming down into the wave E, finishing off the wave 4 termination point right here, wherever this falls, then moving into the 5th leg, meaning this area down here, wherever this termination point is going to be your optimal entry in order to try and catch this 5th wave breaking out of the pattern right here, showing the move overall that we could expect to see right here. So basically, we have a dragon pattern with the head, the hump, the front feet, the rear feet moving into the tail, and we are currently forming the tail. So the dragon pattern corresponds perfectly with a 5-wave impulse where the wave 4 is a contracting or descending triangle, essentially a 5-wave move before the 4th wave termination moving into the 5th wave. I have a feeling that this move is going to be spectacular, but whether or not the wave 5 is going to be truncated, terminating just below the wave 3 point here, sweeping the top, or moving up to the 1.618 is still yet to be determined. So I will be trading this. I've already traded this leg last night right here, moving into this C leg. I will be trading the E coming down and the wave 5 going up. So I will likely end up laddering out of my position like this because I don't know where this thing's going to terminate. But if you can get in down here, adding to your order a little here, perhaps if you break out of this upper trend line, we could see a retest of it, doing something like this. That way you're not stuck relying on the perfect exit. You're just gradually selling into that upward momentum, exiting your position. which could also present another incredible opportunity, because once we hit that wave 5 termination point, we can expect to see another correction. And it's likely going to be a deep correction. So by seeing this in advance, knowing what we're dealing with, it makes it very easy, because we can trade this C, we can trade the E down, we can trade the impulse on the wave 5 up, we can trade the retrace on the wave A down, the B up, the C down, and the whole time we know what our risk is. So if we're going to make a long position here, we can run a fairly tight stop because we have a predominant trend line right here setting the parameters. And we can also use fair value gaps from this area here, setting our stops just below those fair value gaps. So it is possible to get these entries and make these trades based on these trend lines, these previous points, because these must adhere to the Elliott Wave rules, which limits our risk. And we can also ladder into those positions and ladder out of these positions to limit our risk as well. So overall, this is what we're looking at, and this is what I'm thinking. But one thing's for sure, I am going to be trading every single one of these moves based on the Elliott Wave Fibonacci measurements. And just trading one move like this, knowing this one move that we're going to come up for this D, finish the C leg, pull into the E, a 5-wave move to the upside to finish out the 5th wave, moving into an ABC correction. This gives us a lot of opportunity for trading. You could literally sit back for 2 months, 3 months, 4 months like I've been doing, not trading and just accumulating. And then in just one short series of trades over a month or two, make all the money that you'd need for the entire year. You don't have to trade every single day to make money, but you do need to limit your risk, protect your capital at all cost, and the more you trade the high probability trades, reducing your risk by laddering in, laddering out, using stop losses, you can increase your odds of being a successful trader, because you're basically just trading the highest probability setups. You're not trading just to trade, you're trading because you can see an opportunity coming ahead of time. I don't react to price. I get ahead of the moves. I don't let half the move come and then hop on board with everybody else. I anticipate price. I anticipate moves. And when you know where you are in any given pattern, it makes it much easier to set your parameters, because I know where my stop losses are going to be. I know the areas that I'm looking for based on this particular pattern. And if any point in time this pattern fails and stops me out, I will lose the bare minimum because I'm grounded in the pattern. So thank you so much for watching. I appreciate each and every single one of you, and I hope you have a fabulous weekend running around in the Matrix. Enjoy that sunshine, because over here in the States, moving into fall, it's about to start getting chilly. So take advantage of all those beautiful sunny days that we have left, because there's not going to be very many of them left for us. So good luck and take care, everybody. I'll talk to you soon.